The Adaptive Moving Average, or AMA, is a powerful tool for traders. It helps them understand and react to changing market conditions. Unlike traditional moving averages, the AMA doesn't treat all price movements equally. It adapts to volatility, making it a more responsive and reliable indicator. Perry Kaufman developed the AMA in the 1990s. He wanted to address the limitations of traditional moving averages, which often lag behind price movements, especially in volatile markets. The AMA solves this problem by adjusting its sensitivity based on market activity. The AMA's ability to adapt makes it a valuable tool for traders. It helps them identify trends, avoid whipsaws, and make more informed trading decisions. In the following sections, we will delve deeper into how the AMA works and how it can be used in trading. The key to the AMA's effectiveness lies in its ability to adapt to market volatility. It does this by using a special formula that takes into account the speed of price changes. When the market is calm, the AMA moves slowly, filtering out noise and false signals. However, when volatility increases, the AMA reacts quickly, capturing the momentum of the price movement. The formula for calculating the AMA is a bit complex, but the basic idea is simple. It involves measuring the relationship between price changes and the range of price fluctuations over a certain period. This measurement, known as the efficiency ratio, or ER, helps determine how much weight to give to recent price changes. The ER is then used to adjust a smoothing constant, which determines how quickly the AMA responds to new price data. A higher ER leads to a faster AMA, while a lower ER results in a slower AMA. This dynamic adjustment allows the AMA to stay in sync with the market's rhythm. Traders use the AMA for a variety of purposes. One of its primary uses is to identify trends. When the AMA is rising, it suggests that the market is in an uptrend. Conversely, a falling AMA indicates a downtrend. Traders can use these signals to enter and exit trades in the direction of the trend. Another important application of the AMA is to filter out false signals. In volatile markets, prices can fluctuate wildly, leading to whipsaws and false breakouts. The AMA's adaptive nature helps to smooth out these erratic movements, providing a clearer picture of the underlying trend. This can help traders avoid making impulsive decisions based on short-term price fluctuations. Furthermore, the AMA can be used in conjunction with other technical indicators to confirm signals and improve trading accuracy. For example, traders might look for price breakouts above or below the AMA that are also supported by increased trading volume or other momentum indicators. While the AMA is a powerful tool, it is not without its limitations. One potential drawback is that it can be slow to react to sharp price reversals. Since the AMA is designed to filter out noise, it may take some time for it to adjust to sudden shifts in market sentiment. Another consideration is that the AMA is a lagging indicator. This means that it is based on past price data and does not predict future price movements. Therefore, it is important to use the AMA in conjunction with other forms of analysis, such as price action patterns and fundamental analysis, to make informed trading decisions. Finally, it is important to remember that no trading indicator is perfect. The AMA can be a valuable tool for traders, but it should not be used in isolation. By understanding its limitations and using it in conjunction with other analytical techniques, traders can harness the power of the AMA to improve their trading results.